So thank you everybody for being here, and I want to thank Convene. What a great spot, and the D2 team. This is a really real success for your first go round. So congratulations. That was a big word cloud. What we do is tokenize corporate payables and travel inventory. So think of airline tickets and hotels. Those are obligations to pay and obligations to deliver a service. And we tokenize those on chain. So broadly speaking, that's who we are. I am super excited to be here today with Patrick and Circle. I think sort of to set the stage, I have been trying to explain blockchain and crypto and Bitcoin to my mother for the last 6 years. When I first bought Bitcoin and was freaking out when she came to visit me one weekend. And I finally landed on the thing that works for her. It's the velocity of money argument. So if we think about humans and commerce, we bartered, then we had a medium of exchange with gold, then we had fiat currency, the Romans stamped on nickel, then the Italians came up with private IOUs, checks, banks, etc., and now we have ACH, SWIFT, and wire. And does it make sense that it just stops there? Like, do we just go, the world ends at my Amex card, we're completely done? It probably doesn't. And I think if you unpack your expense report, for example, that's kind of bulky and problematic. But the question is what comes next? I am a huge fan of Circle. I'm a big user of your product. And I think that Circle comes next. And I think you guys have a real vision for that. So I think just as a cue up, I'm going to hand that to you, Patrick, but also, if you just want to set the stage, Circle and your personal story.
Sure. Thank you for having us, and thank you to D2 for setting this up. This is a great opportunity to talk a lot about why I got into this business and what's exciting about USDC and what Circle's doing today. I got into crypto 5 years ago, which is a long time in crypto years. The world has changed in many ways since I started. This is my second tour of duty in crypto. My first was at LedgerX, which was the first regulated, CFTC regulated, as a matter of fact, crypto derivatives platform. It was since acquired by FTX. I joined Circle 4.5 years ago to rebuild their treasury function. I never really had sort of an explicit intent to get into crypto. I wasn't the guy who was following Bitcoin and had this grand vision of what the future could hold. It just so happened that as part of my personal network, there were people who were super invested in this space and were trying to solve problems that I was deeply familiar with. Up until the point when I came into crypto, I had spent most of my career in traditional finance. I was at Goldman for 8 years. I was on the buy side for 3 years. And so there were a lot of challenges, a lot of issues that traditional finance in corporate America faces as it relates to the use and the utility and the movement of money that I thought blockchain and crypto could solve. And when Circle called me 5 years ago and said, hey, we're doing this thing called a stablecoin, in addition to other things, we think this actually could be really powerful. We want to do it in a regulated way, in a transparent way, and we think we can build a lot of products and services on top of USDC that are super relevant for the people you've worked with, for the world that you've lived in for most of your career. And that just really resonated with me. That's what I got really excited about. And that's what I've been trying to help build for the last 4 or 5 years.
That's awesome. So in terms of the Circle story, your CEO and co-founder, I think one of the smartest minds of our time, Jeremy Allaire, he talks about money as infrastructure. We are coming out of a wave of fintech applications, which I broadly think is basically being able to throw a bunch of APIs at ACH pull calls. Is that too weird? Does everybody get that? That should make sense. It's like Venmo to your payroll system.
I still don't think most people know how Venmo works for what it's worth. So.
Okay. Plaid. Does everybody know what Plaid is? Right, okay, so Plaid is kind of a simple concept. You log into Chase with username and password, but if you give your username and password to Plaid, Plaid can do that on your behalf, and now suddenly you can go do things financially here and there, and Plaid is interacting on your bank account. So kind of a simple concept. It's APIs, computers talking to computers with tokens to move money around. I think we're coming off the back end of that because we're seeing a lot of those companies kind of hit walls in terms of their valuation or application. I personally think Circle and public blockchains are the next piece of that. I think you guys do too. So I just was wondering if you could just, for all of us, hit the sort of money as infrastructure vision.
Yeah. So Circle had its first conference, its inaugural conference, a few weeks ago in San Francisco. It was called Converge, and one of the big themes that we were trying to help people understand coming out of that conference is crypto is more than just trading and speculation. There's a lot more going on there, and that's what Circle's building today. We sort of hit this critical threshold in terms of size and breadth and use cases with USDC, where now we're 45 to 50 billion in circulation. We're the size of a medium-sized US bank, and there's more to do. There's more problems, more challenges to solve. And so our view is that USDC should be the mechanism that brings people what should be the case with money. It should be as easy, as convenient to use money as it is to send an email. That's something that Jeremy likes to say a lot, and he is a visionary, and he is at all times one of the smartest people in the room. And this is what he said since I joined the company 5 years ago. It should be easy and free and instant to use money, just like it is to send an email. And that's what we're building today. And so some of the use cases that we get really excited about, which I know we'll spend a few minutes getting into, are things like payments and FX and global remittance. These are businesses that haven't changed in decades. It's still the same rails, the same things that people are used to, the same cost structure that people have been familiar with for a long time. And our idea is, hey, let's partner with these great companies that have developed amazing reputations and business models in this space and help them to do something that's in the best interest of their customers, which is offer this for a better rate. Because the reality is USDC, in and of itself, is free to use. You can go to circle.com, you can sign up for an account. It doesn't cost you anything. It's a little bit of a process. You know, we look and feel a little bit like a bank in terms of an onboarding process, but it's free and instant to use USDC at any velocity in any amount. And when you think about how big this could really get, right now, USDC is capable of transacting at 4 times the gross notional volume of the entire Visa network on a per second basis, transactions per second. And so there's a lot there. What we're excited to do now is apply that to traditional finance and traditional corporate America.
Yeah, I mean, I think I totally understand that. I want to make sure everybody is here. I'm going to bring in an analogy.
Yeah, sorry, that was a lot.
No, I totally understand it. So, so to go back to the velocity of money argument, it's sort of implied in that argument that there are certain activities that are not net productive, right? So like if I called the Delta Airlines today and said, I want to pay you in gold or barter in carrots, you know, their productivity goes off the cliff, right?
So, a little bit.
So the idea is that with the velocity of money argument, you know, whenever you jump to the next step, you unlock productivity because there are actions, i.e. record keeping, that are not beneficial. So here's an example. Uber Eats is kind of a remittance company, right? Like you take money from Amex because the person paid with their card, so they got to pay Amex, and Amex is paying Uber Eats, and Uber Eats is paying the restaurant, and they're also paying the driver. So there's just all this remittance. You know, in a USDC world, you sort of step out of that, right? The person who's getting the food could just actually directly on chain pay the restaurant and the driver, because that's all the thing that needed to happen. In a corporate context, this is happening all the time. If you look at a company like Deloitte, right, 70 to 80% of their travel expenses are expensed. This is part of what we do. So they're invoicing their clients, they're paying Amex, Amex is paying United Airlines. You know, in this context, when you think about, you know, money as infrastructure, I think, you know, just as an analogy, I think that's part of what you guys are picturing in terms of the unlock.
Yeah, 100%. And without getting too much into the weeds, when you think about these internet scale platforms, and Uber's like a great example of that, you have people all over the world that need and use money. And so when you sort of dissect that and you look underneath and you say, okay, there's so many different hops of money that happen. If people use a credit card, if they use a local banking rail, it could be ACH wire, it could be the local equivalent wherever they live. In many places, and this is like one interesting sort of piece of the value add, you have an extension of what's possible with traditional banking. And so if you're Uber and you say, on a given day, I've got probably, you know, hundreds of thousands, if not millions of taxi drivers that need to get paid as a function of the rides that they offer every single day. There's many of those folks that live in distributed parts of the planet that actually don't have access to local banking. And the idea that they could go online with an iPhone or whatever else they have to connect to the internet, sign up for an account and get paid with USDC is pretty powerful. And that's one of the things that we like to talk about. We also talk about point-to-point. And so even though Uber is conducting a lot of those transactions, for example, there are many banks and intermediaries involved in there. For the benefit of Uber and the customer, it might be a good idea to collapse some of those intermediaries and actually just USDC to accomplish the same thing and probably save on time and cost friction. So if in a normal case it takes 2, 3, 4 days for somebody to get their money and it costs X, if that happens instantaneously for no cost, that could be a really powerful thing. And I think that's what we're trying to rally folks around right now, is the idea that it takes time and it costs a lot of money to move money, particularly when you have people spread all across the globe. It gets really expensive. USDC can help solve for that. Amen.
I completely see it. I think this is making sense for everybody. I'm sensing, hoping that it is. I think to take a step back, can you just explain what USDC actually is, Treasury, how you manage Treasury, et cetera?
Sure. So USDC is just a digital dollar on a blockchain. And one of the things that Circle does is put USDC on many blockchains. For purposes of this audience, you can think of as a blockchain as very similar to a distributed database, right? And so there are many ways that we've proven over time that these databases are capable of significant scale, are trustworthy of your transactions. Without going into it, let's just assume that's true for a second. These blockchains are capable of amazing scaling. And so USDC today, on a weekly basis, we're seeing gross transactional flow of billions of dollars every single week, week in and week out. And so if the value of a dollar and the efficacy of settlement is the same using USDC as using a traditional dollar, but it's faster and cheaper, that feels like a really compelling thing to talk about with audiences like this.
I know you have a super hard stop. I just want to be aware of that.
A little bit.
Okay. We're running a little bit behind, and he needs to be uptown, so I'm your monitor. I'm your hall monitor.
That's okay.
Okay. And we're also seeing that individuals and corporates who hold USDC are getting interest. That there's actually a real, proper demand pricing for that working capital. This is a product that I use on a number of platforms. Could you just help us explain how you guys see your counterparties and individual users and corporates who are holding USDC and generating interest?
Just in terms of where is the demand coming from? Is that more of the question?
Or that it even exists, that people are holding USDC. And so USDC, think of it as the tokenized dollar against your treasury reserves.
That's right.
I hold them and I earn real interest on them. And there are companies like Ramp and others that are taking corporate treasury and putting it in USDC and generating yield.
Yeah, so that's happening today. It's a little more challenging in a high interest rate environment, but nonetheless, yes, you can have USDC and you can earn 1%, 2%, 3% on your USDC in the same way that you put cash in the bank. So that is possible today. I think that's certainly an interesting component. I think, to me, one of the other interesting things is where USDC is going from a utility perspective. And so if you can earn money on your USDC deposits, there's sort of a capital markets use case for that. And that's really compelling, and particularly when people can put their money in short-term treasuries. From a corporate treasurer's perspective, from a CFO's perspective, that's going to be compelling. Okay, I can get something for holding USDC. There's incremental value here. But when you have sort of the complexity of money problems that a lot of these corporations have, that's the bigger value add. And right now, you have companies like MoneyGram, for example, and you mentioned Ramp, all using USDC to solve some of these problems. You can imagine it will expand from there, and I think we'll be excited to talk about some of those things in the coming months.
Nice. I will be listening. Some of my colleagues here will be listening. Could you talk about regulation and how you guys see the regulatory environment today and where you think this is headed?
Absolutely. So one of the biggest questions we get as a crypto company is, when are you really going to see that influx of institutional adoption? In fact, it is happening today. We have a lot of small to medium-sized businesses that are using our products and services. But when are the megas going to come in? And when are they going to announce a wholesale transformation of how they use money in digital form? And I think some of that is clarity that we are getting through federal regulation. And I think just the fact that the federal government is so focused on stablecoin regulation right now is an indication of how important this has become. So wholesale change is afoot. I think our current impulse is that we feel like regulation could be forthcoming specifically for stablecoins in the next 6 to 12 months, maybe a little bit sooner than that. But I think we feel really good about where that's at. And I do think even though Circle today is a highly regulated company, we're regulated under money transmission law in the United States. We have all 4850 licenses where it's required. There's a higher form of regulation at the federal level that feels like it will be a stamp of approval and will sort of entice people who are already leaning into the conversation to sort of take that next step.
And you guys recently launched your coin.
We did.
Yeah, so this is the Euro version.
That's exactly right.
And I would imagine that there are others to follow. So if you look at a large global corporate, so for example, let's say United Airlines. United Airlines has one revenue accounting center that sits in Houston, and you can access united.com anywhere in the world, and they will sell you an airline ticket in pretty much any local currency. So when you pick it up in Singapore, you're paying in Singaporean dollars. But that money has to get back to Houston as a dollar. So, I know from working in the industry that when you're United, you're monitoring all of this on an hourly basis and looking at the price of gas and, asking yourself, when do I make all these conversions? Do I hold conversions? I just sold a ticket in pounds. I got to get out of that right away. How are you guys thinking about that in terms of like multiple stable coins in a global context?
So I think there's probably a couple things I would point out. And so if the idea is the challenges, a lot of times it's helpful to reduce the challenges to it like a flow of funds. How is money moving? Who does it touch? What are the different factors that are involved? And so if the idea is you're going cross-border with money and you have different denominations involved, and so if you have dollars, for example, and sterling and euros, the idea would be that you can go hop to hop wherever that's involved, whoever is involved, using Circle infrastructure. That happens nearly instantaneously. As a practical matter, it's minutes, if not seconds, typically for a transaction to settle. And it costs almost nothing, fraction of a penny in most cases. That's really powerful. And then you add on to that in theory, you could do instant FX, for example. And so if you've got EuroC and you've got USDC and you need to do a conversion one way or the other, and that's possible to do instantaneously for a real-time, efficient price, I think a lot of CFOs and treasurers would be pretty excited about that. So that's how I would think about that challenge.
Yeah, definitely. Do we have any questions from the audience? I'm not sure if there's a Slido.
Nothing popped up. I think, Patrick, you're free to go grab your cab and hopefully get uptown in 20 minutes.
Yes.
What do you think? Who thinks he can make it?
Yeah, this has been great.
Awesome.
So,
thank you.
Absolutely. Thanks for having me.
Thank you.